Okay, welcome to the Wall Street Crossover Show, starring Darren Sinden from Admiral Markets, who are also the sponsors of this program. Good afternoon, rather. Sorry, Darren.
Yes, the sun has slipped over the yard on me yet again, Zach.
Yes, well, I think that I can explain why I'm in a slightly jittery mode, because I woke up at 3:20 this morning, just missing the Chinese GDP numbers.
Ah. Well, how unlucky for you, sir.
It was terrible. And I looked at the markets, and you couldn't tell whether the figure had come out or not. No, 6.9%.
Yeah, I think the truth is most people just ignored it. There's a few comments about how it was slightly better than the consensus forecast of 6.7%. There's also people saying the realistic read was probably 3%. So you probably see your tent up somewhere in the middle of those two. But as I say, most people seem to just shrugged and moved on. Industrial production was weaker, consumer spending was in line. So I think they probably just ticked the box and looking forward to Thursday now. Right.
Okay. Well, let's just have a look at our first slide, which is data released over the European session.
Yep,
we covered the first bit quite well.
Yes, we have. But yeah, we don't say too much more about that, do we? And then what's happening? There's no actual other data in the EU today, but what's happening this week is there's a fair few things to get our teeth into. German PPI for September out tomorrow. Retail sales here in the UK for September on Thursday. And of course, as we already hinted, the crucial data point then comes with the ECB interest rate meeting. Could they cut rates? Will Mr. Draghi take some additional action? We'll look at that, in fact, at the last slide. And then on Friday, China really bookending the week. We've got Caixin PMI for October for China. We've got Eurozone market flash PMI for October, and then also PMI numbers from France and Germany and Italy too. So
that's quite important.
Yeah, it absolutely just as a guide to manufacturing activity and the health of the underlying Eurozone economy or otherwise.
Okay, well let's move along to the European movers and my favourite bank of the moment.
Yep, we're staying in Germany really for both of these. First of all, Deutsche Bank DBK, the ticker there, €26.78 this morning, up around 3.16%, so I should say. And the new CEO has wasted no time. He's decided to shake up the bank, streamlining the management structures and the lines of report. He's got rid of a huge number of committees, scrapped one entirely, appointed 4 or 5 new divisional heads. He's probably going to be actually trimming down the bank's trading activities. That might be a bit controversial, but for the most part, the market seems to like what they hear. At least it's affirmative action, I think, is the
sounds like the equivalent of drastic Dave in Tesco. That type of
I think it is really
clean sweep.
Absolutely, and start again. And then probably another company that at some stage is going to see similar action is Volkswagen. As we all know, that's ticker VOW in Germany, €118.50, down 2.23% this morning, and more issues for the company to deal with in as much as the weekend press suggesting that shareholders may now sue the company over the €40 billion of losses in market value. So they've not only got to contend with customers, the regulators in Europe and the US now, the shareholders are revolting too. So whether that comes to pass remains to be seen.
Well, these class actions tend to be rather a long stand. Actually, people die, I think, before they actually get to their conclusions.
They do, but it's just not good for sentiment, I suppose, that it's the real truth.
Okay, let's go for the MA rumours and movers.
Okay, a deal that was announced this morning. It's not a completely done deal yet, but it's likely to go through. ATM maker Diebold, that's DBD in the US, is in talks, I should say, to buy Germany's Wincor Nixdorf, which is WIN in Germany. €52.50 per share. Diebold's prepared to pay for Wincor, and the Wincor stock was up by around just under 16%, in fact, to €45 on the back of that news. It's not a completely new story because the companies had been in talks and they came to a non-binding agreement on September the 24th, but as I say, formal terms were announced today, and it turns out that most of the offer will be made to Wincor shareholders in cash. The takeover would give Diebold a much bigger foothold in the European ATM and security systems market, which is its sort of core business really, but it hasn't had much impact in Europe to date. Wincor sales have been falling recently. particularly in China and Russia, and the company had announced a streamlining back in April this year, cutting 1,100 jobs from its headcount. That said, they're still quite a decent sized employer. Diebold employs around 16,000 staff in the US, and Wincor has a headcount of around 9,000 bodies here in Europe. So quite a meaningful deal for that space. And probably Diebold being a bit opportunistic and picking up Wincor when they're struggling somewhat, I should suggest.
Right, so a decent deal there.
Yeah, absolutely, yeah.
Okay, we'll move along to the US data points.
Okay, well, for the second week in a row, we've got a very thin start to the week. There's no data of note today on the US calendar. I think we've got some Fed governors speaking later today, but they've just been trotting out the same old rhetoric of late, so we won't move too much about that. Tomorrow is when it starts to get interesting. We've got housing starts and permits on Tuesday. Then on Thursday, our old friend weekly job list claims, and in line with Europe and China, we have the flash manufacturing PMI for October for the US on Friday. So PMI is very much taking us towards the end of the week there.
Right, so a moderate diary.
Yes, yeah, because obviously the Fed is the following week, so things are sort of wound down before then.
Okay, let's go on to the pre-market movers and levels.
Okay, well, I picked on a couple of things that caught my eye from Friday's session. Vale, VALE, the Brazilian miner, €4.75 down 0.84%. Pre-market, but the reason I focus on this is because they're easier after the China data. They had a poor session on Friday. They were down 2.39% in a market that was generally going higher. And then Twitter, TWTR in the US, $31.33, up around 0.6%. However, they rallied by about 4.85% on Friday afternoon, as Steve Ballmer, the former CEO of Microsoft, disclosed a 4% stake in the company. It could just be that sitting there for his investment portfolio, or he might have bigger designs on the company. It's roughly got a market cap of about $21 billion. He obviously knows plenty of rich people and is not a poor man in his own right. So watch this space. I think is
very interesting indeed, intriguing.
Indeed, and in terms of market levels, not too much in the way of change from Friday's levels. In the FTSE, 63.60 on the downside, plays 64.30 to the upside. For the DAX, we're at 10,084 on the downside, playing 10,200 to the upside. S&P back above its 200-day EMA as of Friday's close, but we watch 2010 on the downside, plays 20.30 to the upside. And as far as the Dow is concerned, we're at 17,107 on the downside, plays 17,220 to the upside. As we said, the market seems to have largely shrugged off the China data, so there's not that much to talk about currency-wise. 113.27 on the downside now for Euro US dollar, plays 113.80 to the upside.
That has dipped. I mean, it's almost as if they sort of feel there might be something on Thursday. That's a sort of that was a feeling I'm getting, but maybe I'm alone in that type of.
The dollar does appear to reassert a little bit of control there, and you would. If you assume that they're going to expand the program on 30, you would expect to see a bit of euro weakness. Aussie dollar, US dollar, no great shakes there. Back below the 73 handle for the minute, 72.65 to the downside, plays 73.02 to the upside. I believe I'm right in saying we've got the Reserve Bank of Australia minutes out tomorrow morning, so that may move that again. And Goldman's have also said in a piece over the weekend that El Nino could cause a prolonged drought in Australia, which could take GDP back below 2%, so that's something to think about going forward. Dollar yen, 118.95 on the downside, plays 119.52 to the upside. Again, pretty static. Cable flirting towards that 155 handle, 154.25 the downside level, plays 154.85 to the upside at the moment.
All right, okay, let's go to our in focus area.
Well, there's only, as I said, there's really only one thing to look at. As far as this week's concerned, it is the ECB meeting on Thursday. It's a well-known story, this, but despite the ECB QE and the expansion of the central bank's balance sheets, which has really been kicking in since last autumn, the recovery in the Eurozone remains sluggish. Manufacturing activity could be dipping once more, and here we look at the first chart there, number one, the central bank's balance sheet expansion against manufacturing PMI, remembering that we've got that data to come again at the end of the week. And of course, the other area that we're watching very closely is inflation. It remains erratic in the Eurozone, and could threaten to go negative once more. Now we have seen a slight bounce, but just look at the longer term trend here.
It's
series of lower lows.
Sad, yes.
It's not making a particularly good reading. So the question is, could we see a further rate cut from the ECB? I think it's unlikely, but not impossible. Might we see more targeted lending via their targeted long-term repo operations, the so-called TLTRO, or something similar to that? Yes, I think that's quite possible that they'll revamp that or expand it. Will they enhance their QE plan? And here I'm thinking of more money, a wider range of assets that they could buy, more targeted asset buying, perhaps in struggling economies. I'm thinking there of maybe France, and perhaps even a longer tenure for QE, and I think all of those things are potentially likely. My best guess is that they hint at a lot of those rather than actually pulling the trigger, because there may be some discussions that have to be had behind the scenes. But I think we'll see Draghi at least talking a game of affirmative action on Thursday.
Right, but not really pushing the button.
Well, I think he'll try and do what he can, but I think.
Will that come later in the year anyway?
Possibly, probably.
It's going to come at all.
Probably will, because as I say, a lot of these things are outside of his control, and he needs to get political approval, which of course in Europe never comes very easily, does it? So.
Or very quickly, yes.
No.
Okay. Well, Darren Sinden, market commentator, Admiral Markets. Thanks for the Wall Street crossover show today, and we'll be back at the end of the week.